Hey, fellow investors. Hadn't made a video in a while. When I look at, um, when I just go to just normal finance stuff, it's all doom and gloom. Sell now. Get out by Monday. 10 hours left. You know when I was scared last time? You know when I was scared when the janitor at the job I was working was buying Dogecoin. You looked on the news, everything's going up. Everything just keeps going up, 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 up. Housing market is doing great. Bitcoin is doing great. Gold is doing great. That's when I sold last time. But when I see the contrarians sell now, get out by tomorrow, that makes me want to buy, to be honest with you. Now, granted, I know the U.S. is the worst house in the bad neighborhood, and Europe is bad, China, Japan, they're worse. I really wish I would have gone into coal, because when I was looking a while back when Biden was in office, well, of course he's still in office, but they hated fossil fuels. They hated the coal. They thought that 3% of the windmills, 3% of the world's energy is like windmills and solars, and they thought that was going to power the planet. I really wish I would have got into coal, because one guy got really rich off of betting on coal. Because even though coal is seldom used now, the overall demand for it, or usage of it, has still gone up over the years. But I've talked about this before. I know there's going to be a crash, and I think it's when it does happen, it might be like 1929, and no one is alive today that remembers, or if they do, they're so old and senile that they can't think straight. But basically, no one is alive today from 1929, so nobody remembers. But I can remember being in high school, and my dad came home one day and said, you know, I've lost half of my savings. So people can remember back to the dot-com. They can remember the 2008. They can remember some of these things, but nothing was ever like 1929, because basically in today's stock market in the U.S., the U.S. GDP is somewhere around $30 trillion. So the U.S. stock market should be around $30 trillion, right? Or less. No, the stock market in the U.S. is worth about $60 trillion. Double. So, I mean, it's way overvalued. It's hard to find deals. You're paying 20 times earnings if you're lucky. And what is 20 times earnings? That's the 5% return. You get your initial investment back in 20 years. Everything past that is a profit. But who wants to wait 20 years just to make a profit? So I think the best thing to do right now is just hold tight, save up some cash if you can. If you see something on your wish list that that it might be a little cheap, snag some up. But yeah, it doesn't scare me that everyone's saying get out now, get out tomorrow, sell tomorrow. Hedge funds are selling. Big guys are selling. They're selling. They're selling. They're selling. I would say out of some of the big names, I like that Berkshire Hathaway has $350 billion in cash or cash equivalents on hand. But, I wanted to buy Berkshire when it was $200 a share, not when it's 400 and I don't know what it is now, 443. Why would I want to pay double? Why would I want to pay double? I mean, a correction could come, no doubt. We've been basically a crash should happen every 7 years, but the way the U.S. finance system works is they just print money. They don't learn from their past mistakes. They just kick the can down the road and leave it to another generation or another group of senators to fix the problem. And right now in America, their savings rate is 0. Debt is at all-time highs. Corporate debt plus private sector debt. In private sector debt, you got car loans, all-time high. You got student loans, all-time high. You got credit cards, all-time high. And, people, now this is a certain, if interest rates go up, that is good for bonds, it is bad for stocks. But even at 5%, a 5% return is pitiful. Over the last 40, 50 years, if you just invest in the S&P 500, you get a 10% return. You got some good years, some bad years, it evens out to be about 10%. But because of the printing money, a lot of that money that was printed went into financial assets, stocks, bonds, real estate, and it made real estate a bubble. The stock market in the U.S. has been in a bubble for a very long time. So you're not going to get a 10% return anymore. And quite frankly, a lot of people, they'll be lucky to get a 5% return. their return's probably going to be negative unless they are very careful on how they deploy capital. If you want to put your money in Tesla, if you're going to put your money in Nvidia, if you're going to put your money in Apple, you're going to lose money. No ifs, ands, buts about it. You're just going to lose. You're like one of them people called a sucker. You know, the value investor, which is what I characterize myself as, you have to do opposite of what everyone else is doing. So if everyone is saying don't buy coal, don't buy coal, don't buy oil, buy windmills, buy solar, you do the opposite of what they say. Look at 100-year charts, 50-year charts. Look what commodities are undervalued right now. I still think silver is a very good play if you don't mind not getting any dividends. If you want to be ultra safe, because what is a bond? A bond is a promise to pay. It is a debt note. Money in itself is a debt note. Whereas if you buy a silver bullion, that's real money. You can go to the pawn shop and trade an ounce of silver for real money, real cash. But if I thought that gold's intrinsic value was somewhere around 1,300, which is what I believe it should be, and it's at 2,600 now, it's way overvalued. Silver should be around $70 an ounce, and it's been at 20 forever, 25, whatever it is, I don't care. But every single cruise missile we shoot up in the air has a ton of silver in it. Not a ton literally, I can't remember the exact number, but when you start shooting off 1,000 or 2,000 cruise missiles, that's a lot of damn silver you're wasting. And not only that, all the silver is basically consumed, is used up. It's used for electronics, whereas gold sits around in a vault somewhere, and you can stare at it and look at it. But you can't go to the grocery store and buy a loaf of bread with a silver bar. In that case, I'd rather have a gun. Then you could shoot a person with a silver bar if they try to take something from you. If they try to come into your house without permission. If they try to hurt one of your loved ones. You got to defend your property, defend your home, protect your family, protect your friends. These are uncertain times. I don't know if we're going to World War III. I don't know if there's going to be another tsunami. I don't know if there's going to be, a terrorist attack. I don't know if there's going to be another wildfire. I don't know. I don't know the future. And the best day trader in the world basically made all his money by shorting the market. So I mean, and he made probably $30 million a year doing that. So if you're doom and gloom, it's probably going to be doom and gloom. Short the market. I don't think we're at that point yet. I think The time to do that is when everyone is saying buy, buy, buy. Buy, buy, buy. Inflation, inflation, inflation. Because if inflation continues, that will be good for the stock market. But my point of view, it has been my point of view from the very beginning, is at some point we're going to have deflation. The housing market in China has already collapsed. They got massive unemployment. They got another coronavirus type virus over there. Everybody's sick. They got no jobs. They spent 2 billion won or whatever on a house, and that house is worth 50,000 won now, or whatever the hell it is. In China, they poured their life savings into these homes that don't exist. These places that don't house any people. There's no industries to support those houses. They might have a city of 100,000 people, and they got enough apartments to house 10 million people. I mean, it's ludicrous. And the old saying, rob Peter to pay Paul. Well, they were robbing Peter, robbing Paul, robbing Jesus, robbing everybody, and then they were taking in 9 people's incomes and not even building one house with that money. And then they go bankrupt. Then everybody's wondering where the money went. I do think that we are in the end times. If you're a Christian, if you believe in that kind of stuff, I do think that we are in the fifth seal, the fifth vow, and next is Antichrist showing up at the 6th trump, and then Christ at the 7th. Now, I don't care if you believe me or not. I really don't care. To each their own. You read the book, make your own decision. Or, if you have a different religion or different belief, so be it. To each their own. Different strokes for different folks. But in the religion I believe in, there's going to be wars and rumors of wars. There's going to be earthquakes in diverse places. Places that you've never seen volcanoes before. You're going to see eruptions. Places you've never seen tsunamis before. You're going to see tsunamis. Places you've never seen wildfires before. You're going to see wildfires. But we fought many wars, and you know what? We overcame them all, and the economy kept forward. We had innovation. We got smarter, sometimes dumber, but as a whole, a couple people were smart and gave us new inventions that changed the well-being of a lot of people, whether it be the light bulb, or making the car, or making the computer, or what have you. Our lives are significantly better than they were hundreds and hundreds of years ago. So regardless of wars, famines, earthquakes, natural disasters, terrorist attacks, COVIDs, sicknesses that are meant to destroy the human population. Might be asteroids, might be some kind of weird species that somebody invented, or you never know. But the thing is, as long as we remain here on this earth, in this earth age, I think that we as humanity will continue to make progress, will continue to I don't know what the next innovation is. I don't know what it's going to be. But something will improve our lives. Something will make it so that we can have more time to spend with our friends and family. That we as a society can be productive members of the society. That we don't go into complete chaos. That we don't all kill each other. That we can agree to disagree and get along to make a living for ourselves and our families and have a happy life. So, I mean, they can be negative. Yeah, there's a lot of negative stuff. We got way too much debt. We got debt that we can't pay. The government is broke. They only take in $2 trillion a year in taxes, but yet their budget's like around $6 trillion. They're spending money they don't have. They're robbing your kids and your grandkids from their money, from their futures. And that's not right. And it's not right as a society that we have put future generations into slavery. That we have put this humongous debt burden on them that was not their responsibility, that was not their problem. But we were too irresponsible and selfish that we didn't care about our kids and grandkids. All we cared about was ourselves. You got a society now that, they don't want to work. They think the government owes them something. They think they're owed food stamps. They think they're owed free health care. They think they're owed free college. They think they're owed free education. They think they're owed everything from cradle to grave. Even the inmates. You could sue the government because you were mistreated. You get 3 hots and a cot for free. Costs the taxpayer around $100,000. And then when you get out, you can sue the government. I don't know all the answers, guys. All I know is you basically want to be in an area that the general consensus is against. And to me, I've said the place I would like to be is in oil and gas. And the reason why is everyone was talking windmills, everyone was talking solar, gas is going away. No, it's not. It's going to be here for at least another 20 years, probably longer. Maybe 100 years. It is our cheapest form of energy around the world, and economies thrive on cheap energy. And if you want to be a tree hugger, if you don't want to see nothing melt, go, go live in a tree somewhere. Go live in a forest, and don't ever use a cell phone. Don't ever start a car, and live off the land. But the very people that scold us for polluting the environment, the Al Gores, that they'll fly in their private jet, and they'll spend more hydrocarbons and pollute the environment more than 10,000 people in their whole entire lifetime would in one plane trip probably. And yet they're going to lecture us on how to be good citizens. A lot of people that are rich got there from because they made wise decisions, or they got lucky, or they made some good investments over a long period of time, or they just didn't make too many stupid decisions, or they just invested in America. But there's also a lot of people who got there by being crooks. So, don't idolize everybody that's super wealthy, because believe me, there's a judgment coming one day. And you don't want to be on the other side of the gulf. You don't want to be with those people that didn't make it. But, my goal, my dream, and a long time ago I had asked God, not my will, but your will. How can I help the most number of people? And this is, I believe, my calling is to help people with finance, or start my own fund and help people and grow that wealth. Warren Buffett started with $100 and grew it, but Warren Buffett's not a good person. He doesn't believe in God. He doesn't believe in Christianity. He doesn't believe in anything. He doesn't tip well, if anything. But you try to look for the good in people. You try to learn the good qualities, and I try to learn the good qualities that make Warren Buffett who he is today, and his mindset, and but no, I wouldn't want to be Warren Buffett, because like I said, he doesn't believe in Christianity. He doesn't believe that there's a God. And not only that, he wants to leave 99% of his wealth to charity. If I'm building a solid foundation for a family, I want it to last 100 years, 1,000 years, 2,000 years. What normally happens, and I've talked about this before, is most millionaires in this country, they're teachers and they're engineers. And yeah, none of them made crazy amounts of money, but they probably made $100,000 a year after taxes. They, lived off 60 and invested 40,000 for 30 or 40 years of their life, and now they got a couple $1,000,000 to spend. Now they're not going to be reliant on the government to take care of them. Like I said, the government doesn't have any money. The government is somewhere around $400 to $600 trillion in debt. The pension funds are bust. Most of them are going bust. They've made promises to people that they can't keep. When Social Security was invented, the average black man in America died at age 65, so they got nothing. And now we're living to 80s, 90s, 100s, but yet we're fatter. We got more health problems. We're not in shape. We're out of shape. We got bad health. We got a lot of problems, and people are no longer able to work. In Hebrew, there's no word for retirement. People worked till they died, or if you were blessed to have some means, you take a risk and try to start another business, try to help another community, but at the same time you expect to get a return on your money, a return on your investment. Yeah, you might be doing it to help people, but if you're already rich, you don't need any more money. You might have enough money to last 100 lifetimes. You could just sit in the Bahamas and sip champagne and have cocktail parties every night and listen to music or travel around the world or do whatever you want. You never have to work again. But people still work because they want to help other people. They might have a good idea. Hey, this might be a good idea. This could maybe, help this community. This could maybe provide some jobs. You got a lot of people that are sitting around and not working. You got a lot of homeless people that can't afford rent, and they're just out on the streets, defecating in the streets. And we can't figure out a solution. We can't provide some low-cost housing, a couple, makeshift shacks to give these people a place to live, so they could actually be productive members of society. And then we got more people in this country incarcerated than anywhere else in the world. Kill them, get rid of them. If they committed murder or some heinous offense, kill them. And if that doesn't work, maybe their family's rich and they want to subsidize their existence for the next 50 or 100 years. Well, make them pay. They want to pay $1 million a year to keep them alive. But I know I'm going on a tangent here, and I don't care really if my fund, I really want to do it because I want to help people, and I believe that it's is God's will and my calling for my life. And I've done a lot of different things, and this is the last career step I want to take. And I know I can do really well in it. And I know I can help a lot of people. But I don't care if it's one person. I don't care if it's 100 people that believe in me. But if you seriously believe in me, that you're willing to trust, I don't want anyone's entire fortune. If you want to trust me with 5%, 10%, and you don't care what happens with the money, it could go to zero. I could be totally wrong, and it could go right to zero. I remember my dad told me one time, he said that he had invested $100,000 into an oil stock one time, and within 10 days it went to zero. He had lost $10,000 every day for 10 days, or something like that. And anyway, it went to zero. So, you know, I've been right sometimes, I've been wrong sometimes. But one thing I've never done is never gone broke. And to me, if you invest in, let's say, 10 decent companies, and I used to buy the ones that I thought were going to 5 or 10x or more. I could be wrong on 9 out of 10 and still not lose money. As I've gotten older, as I've learned a little more and become a little more seasoned, I'm less willing to go all in or a significant chunk into speculation, even if it looks very good on paper, because they could be lying. And a lot of the companies that are undervalued, a lot of them are crap companies, to be honest with you. You know, if you're investing in a monopoly, the monopoly has no one to compete against. Of course, if you're investing in a monopoly, of course you're going to continue to make money, but at least in the U.S., we used to break up monopolies. We had the big oil we broke up. We broke up the phone companies. But I guess now that it's a world economy, it's okay to have monopolies. Now, I'm not going to say that, Amazon and stuff isn't a good company. But look at the market cap. It's $2 trillion. $2 trillion. Now, let's say you invest in Amazon today. Well, how long before it doubles? How long before it goes from 2 trillion to 4 trillion? Or is it easier to buy a stock that's $10 to go from 10 to 20? Or for a stock to go from 1 to 2? I would say if you're a coward, if you don't ever want to, lose any money long term, because you're going to lose money in the short term, no doubt. But in the long term, you're gonna make money. I mean, maybe if you're buying down here at 150, you're gonna make money. But look at the PE ratio. The PE ratio is 46. So what does that say? That tells you it's going to take you 46 years to get your money back. I mean, it might keep going up for a long time, but that doesn't mean that it's a great investment. I told my sister this years ago, back when Tesla was $20 pre-split, pre-whatever, that it made no money. It was 1 or 2 days from bankruptcy. At the time, it was trading at 1,000 times earnings, and they basically had no earnings. The only way they were even making any money at all on paper was the government gave them tax credits for being green energy, and they could sell those tax credits to high polluters, the evil coal industry, for example, or gas company, oil company. And I mean, I'm not going to bet against Tesla, but I mean, this thing is ridiculous. This is a mammoth bubble. And you have to be senile if you don't see that. That this company that has no earnings somehow has over $1 trillion market cap with no earnings. Now, Berkshire Hathaway, look at the size difference between Berkshire Hathaway and Tesla. Berkshire Hathaway actually has $350 billion in cash. They fully own a lot of different companies. They partially own a lot of companies. They own 10% of Coca-Cola. They own 20% of American Express. I think they owned 5% of Apple or so at one point. They owned at least 10% of Bank of America last time I checked. They have a lot of good, solid companies. I could sleep well at night knowing I had all my money in Berkshire Hathaway. I could sleep well at night knowing that I had the 500 biggest companies, publicly traded companies in America, if they were equally weighted, and sleep well at night. But VOO was almost $600. I mean, if Berkshire, to me, Berkshire Hathaway and the S&P 500 are going to give you about a 10, at least in past, we're going to give you about a 10% return. Now let's say Berkshire Hathaway was trading at $200 a share, and VOO was at $600 a share. But back when Berkshire Hathaway was around $200 a share, VOO was somewhere around the 300 range, maybe even higher, maybe 350. But if I'm not even willing to buy Berkshire Hathaway that was trading at below book value, that had 200 or so billion dollars at that time in cash, with a $600 billion market cap, why the hell would I pay double or triple for VOO and just get a similar return as buying Berkshire Hathaway? That's stupid. And now look how expensive VOO is. Over $500 a share. I'm not even going to touch Berkshire Hathaway with a 10-foot pole at $443, regardless of whether they got $300 billion in cash or not. Because in my mind, Berkshire Hathaway should be around $200. Maybe $250 at the most. Not no close to $500. I mean, the B shares were starting out at $200 not that long ago. Hadn't been even that long ago that the B shares were that cheap. But where Berkshire is going to be a good bet is if the economy goes to shit and the government can't bail out everybody, and they're gonna have, you know, and you can see where their book value is around $300, and they were trading below book value when it was around $200. But back then, there was better options. Even though I thought Berkshire Hathaway was at a fair price, to me it wasn't, like half off. It wasn't like it was going to 5x, wasn't going to 10x, and it's still taken, 5 or 6 years to double from that 200. So, in my opinion, this is a bubble. If you're paying $450, you're stupid. Now, if you know that tomorrow the whole economy is going to collapse, the stock market is going to lose 1,500 points Monday, the stock market is going to lose 2,000 points Tuesday. On Wednesday, the stock market loses 3,000 points. And on Thursday, the stock market loses 4,000 points. Now, if you know that, I would buy Berkshire Hathaway. Why? Because they have the cash, and they could turn $1 into $3 or $4. They're going to turn $1 into two. More than likely. But what business is Berkshire Hathaway in? They're in the insurance business. So guess what, guys? They need a lot of that cash, because if a big tsunami hits, if a big natural disaster wipes out 15,000 homes in California, guess who's paying? The insurance companies. Yes. They are in insurance. The way they have made money is you get a premium, and they have invested that premium wisely. And you might be taking a premium from somebody for 5 or 10 years before you ever have to pay anything out in pocket. And a lot of times people might have a home, they might be paying insurance on their house, but they got flood insurance. And guess what? A big wind comes and blows your house down, and you don't get a damn penny. Because you had the damn wrong kind of insurance. Or you got flood insurance, and here comes a volcano, and a big fireball comes and plops down in your living room. Guess what? They don't got to pay shit, because you got the wrong kind of insurance, buddy. But if there are wars and rumors of wars, if there's earthquakes in diverse places, these insurance people, they go by the numbers, they go by the facts. They can tell you how long you're going to live. They can tell you, they know when your peak spending years are. Anything after 40, you're downhill. You've already bought your first house, more than likely. You've already bought your first car. You've already bought everything you need for the kids. And even though I think Berkshire Hathaway is going to be in good hands long after Warren Buffett leaves, 99% of Berkshire Hathaway's, of Warren Buffett's wealth is going to charity. So over the coming years, they're going to be selling shares, not buying shares. They're going to be selling shares because they have to. They're giving it away to charity. But the reason why Warren Buffett is so rich is he doesn't have a job. He doesn't have an income. He just buys stock and never sells it. And when you buy something and never sell it, guess what? There's not a taxable event. Except dividends. But Berkshire Hathaway doesn't pay any dividends. All their dividends that they get are reinvested into Berkshire Hathaway. And here you got the richest man in the world at one point, and pretty much never paid any taxes. People want to talk about pay their fair share. But they talk about that, but they give all the super wealthy people all kinds of tax breaks and loopholes and fancy lawyers, and they don't have to end up paying hardly anything or nothing, and the average Joe gets hit because they got to work for a living. They got to work to pay the rent. 60% of people in America don't even have $400 for in their bank account for an emergency. They are paycheck to paycheck. They don't save anything. And Christmas to me it's a time for giving, but because we're forced into giving, a lot of people who don't have money go into debt, go into credit card debt, and then they have to spend the whole year paying off that debt. And a lot of people, they think, oh, well, I deserve this vacation. I earned it. You're broke. You don't get a vacation. You work 5 days a week for 8 hours and think you got it rough. What does the Bible say? Work 6 days, rest on the seventh. But yeah, I think we might be in for a rocky time. But as for me, I'm happy with my 10% dividends. I'm happy sitting back. I'm happy getting a 10% dividend or so. Reinvesting those dividends, buying more and more shares every month, and there might be good days, there might be bad days. But if you're at all squeamish, if you get upset because you've lost 1 or 2% of your uh, portfolio value in the last week or so, get out. You're not cut out for this. But as a value investor, you want volatility. You want things to go down 50%, down 75%, down 60%. Why? Because that creates buying opportunities, because things get oversold, or shorting opportunities when things get overbought. But shorting is a dangerous game because there's actually no limit in how much money you can lose. And when you short, you're basically betting against a company. You're basically destroying jobs. You're trying to make that company go to zero. You're shorting it all the way to zero. You're trying to destroy those 30,000 jobs, those 60,000 jobs. You're destroying houses. You're destroying families. You're destroying people that have invested their life savings into a company. So I don't like shorting unless a company has done something very egregious. Let's say you invest in Nike or something, and then you find out that that the enslaved people in China are the ones making the shoes. Or let's say that you're a tree hugger and you found out that they're killing animals or something in a barbaric way, and something like that. There was a company I saw in Congress the other day where they were grilling them, and they had just laid off 15,000 employees or so. But guess what? The CEO got a $15 million pay raise. You got to destroy the lives of 15,000 people, but yet you're going to give the CEO a $15 million pay raise, doubling his salary for ruining the lives of 15,000 people. I don't like that. And maybe the guy deserves the extra 15 million. Maybe he was a genius and, could see through a crystal ball, and maybe he deserved that 15 million. Maybe he made somebody $100 million. So to them, if he's making the company $100 million profit, and they think that, well, maybe he deserves 15. But no, guys, I'm still here. I'm in the shadows. I'm just holding pat. I'm watching. And what I see, when I look up, markets are falling. Why is the stock market tumbling down? Is it the next crash? Survive the storm coming. Blah, blah, blah. Blah, blah, blah. Blah, blah, blah. Negative, 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 negative. So when I start seeing stuff like that, it's not time yet, guys. It's not time yet. Now maybe if you hold these big ones, because like I said, these magnificent seven: Google, Meta, Tesla, Amazon, Apple, Microsoft, Nvidia. These companies, is when you buy the S&P, that's 25-35% of the overall market cap of the S&P 500. I wish you could just take these little squares and move them over so you could see. But you get this: 2, 3, 4, 5, 6, 7. These magnificent seven. And I would love to add Berkshire to that too. Because Berkshire is actually a real company. Google is a real company. Microsoft, I believe, is a real company. I'm not sold. I mean, I know these are monopolies right now, but I'm not sold long term on them. Tesla doesn't make any money. I still don't understand how Facebook makes any money at all. But they basically make money by selling your information to advertisers. And advertisers pay them for that information. And you've sold your information to Facebook, and most of you never got a check in the mail. So I think this is slimy. I think this is, a lot of people have lost their marriages over Facebook. They've lost their family over Facebook. A lot of people have been killed in school. They've been bullied. They've been harassed. A lot of lives have been also ruined by Facebook. And, this is a huge bubble. 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 Like the time to buy Facebook would have been, it was back in COVID happened, and Facebook lost, I want to say, 70% of its value. That was the only time that I ever considered buying Facebook, and I think it was probably $100 back then. But I don't like them. I think the I think Zuckerberg's a slime ball. And back when I was younger, they had something called MySpace, and MySpace was actually more popular than Facebook. And I don't know what what under tactics or whatever Facebook did to get MySpace out of the picture, but I think they did something underhanded. But anyway, guys, I would just say, you know, be looking at some of your companies here. If you only want to pick out the S&P 500, and let's say you got Berkshire Hathaway up there or something, and let's say, all right, I don't like 443, but I'll be buying at 250. Be looking, because you're going to have opportunities here at some point in the future. And a lot of these little smaller companies, these might be the next Googles, the next Amazons, the next, one of these little small ones right here. They might be growing. I hate to use the word growth because growth, like I've said many times, to a value investor has no value. Just to maintain their current market share, you might have to spend let's say $10 million on advertisement every year to ensure that you get those 2 million customers that spend $10 every month in your store. So, in a competitive market, growth has no value. What a lot of people do is they overpay for growth. And you don't want that. You want the growth for free. You want to buy something either at a fair price, and fair to me is a PE of 15 or less, or underpriced, maybe at a PE of under 10. So you can get your money back within 10 years, and everything past that is a profit. So let's say you buy, let's say John Deere, for example, and I don't know what the PE of John Deere is, but I would guesstimate that John Deere is trading probably at 40 times earnings. Oh my gosh, is actually trading at 16. 16 times earnings. But you got the book value here at $84, and the market price is at almost 500. In fact, it was over 460 not long ago. This is overvalued. It's overpriced. John Deere is a good company. I mean, they pay a good dividend. Not really a 1% dividend. But why would you ever want to pay 4 or 5 times more than the company is worth? You're paying $116 billion for, let's say you're buying the whole company, you're paying $116 billion, and they're going to give you $7 billion year one. That's not a good deal. If I'm buying a company for $100 billion, they need to be giving me at least $10 billion year one. And they better be giving me $15 billion year two, and $20 billion year three, and $25 billion year four, and $30 billion year five. And after that, I don't care because I'm selling, taking my profit and getting out. Or if they're doing that for the next 20 years, maybe you just buy 1 or 2% of John Deere and buy another 1 or 2% of a couple other good companies. Sit back and enjoy your milkshake. But you don't want to be buying it at $400 or $500 a share. You know, maybe $100, maybe 150. But I'm definitely not buying at 429. I don't care if it's up 20% in 1 year. It doesn't mean it's a good buy. It means you got a bunch of morons, a bunch of idiots that are want to overpay. Just like the housing market, you know, I saw houses that were worth 50,000 before COVID. After COVID, they're worth 200,000. Does that mean that's a good investment? Of course not. But it was 2% interest rate. But it was only 2% interest rate. I don't give a fuck what the fucking interest rate was. Why would you think that paying $200,000 for a house that's only worth 50 is a good deal? You're overpaying 4x. You're basically buying the bank a free house, a free car, and probably giving them $50,000 in cash before your house is ever paid off. And they're laughing all the way with you to the bank. They're laughing at you. They're taking your money before your house is ever even paid. Imagine a house has a big bubble over it, and all the money you throw into that house, it's like a little force field, and all that money just bounces off your house. It doesn't go into your house. It goes into the bank's pockets, and the bank gets at least one free house. They at least get a free Lexus, and $50,000 or $100,000 cash, and then they might think about paying off your house. After you've bypassed that force field that's called interest that you pay the bank through a mortgage. After you think you're buying a house for 200,000, And then after 30 years, you realize, damn, I paid the bank $100,000 extra, or I paid the bank actually $500,000 or $600,000 for this house they said was only 200,000. They're laughing at you all the way to the bank. Now, granted, in a typical environment, as long as you can make a 2% return, which any idiot can do, you can pretty much pick any stock on here that pays a dividend. Let's look at Merck, for example. Merck pays a 3% dividend. Is it overvalued? Of course it is. Most well-known companies in America are very overvalued. It's trading at 20 times earnings. You're basically getting a 5% return. 3% of that is in a dividend. But if inflation was 2%, you would still be staying ahead of inflation. You'd still be getting at least a 1% return just from the dividend alone on top of inflation, and you would be staying ahead, and you would be maintaining your purchasing power. Unfortunately, I don't know what inflation is right now. If I had to guess, I would say it's 15 or 20%. So in order to maintain your purchasing power, you would have to be getting a 15 or 20% annual return just to maintain your current purchasing power. So that is why most people have no money right now. Most people are broke. Most people are in a lot of debt because inflation is higher than their return. Now, a lot of people say, oh, well, why don't you go to bonds? You can get a 5% return in bonds. Well, even though a 5% return is still better than 3, I would much rather own a good business that is slowly acquiring. Let's say you buy a liquor company or something, and every year they add one new brand to their liquor. Well, they're growing. They're accumulating more and more brands, just like Coke and Pepsi. You know, I don't know what Pepsi owns, but let's say they own Frito-Lay's, and maybe they own Doritos, and maybe they own Snickers, or maybe, I don't know everything they own, but every year they're acquiring more and more and more and more brands. So they're growing as a company. And what's the number one uh, candy in America? Snickers. What's the number one cigarette? Marlboro. Not Marlboro, Newport. I thought about BTI recently. And a lot of people don't like to invest in cigarette companies because, one of the sin stocks or whatever. And I recommended this a while back, right when COVID hit. They're paying a really good dividend. Unfortunately, they lost $7 a share. Their earnings per share was -7. So, yeah, they paid you $3, but you lost 7. And then you got Biden, who wants to basically ban cigarettes coming out of office. I don't know. This could be a buying opportunity. If cigarettes get banned, This could be a huge buying opportunity. This thing drops to 15, drops to 10, might be a buying opportunity. But it's very rare, very, very rare that you have buying opportunities for these companies. You know, like I said, Meta, you could have bought Google back when they did a split. Meta, when it fell 70% back in COVID. Berkshire Hathaway, back when it was $200 back in COVID. If you wait long enough and you look and you got this thing on your watch list, Netflix at $840 a share, that's ridiculous. They're trading at almost 50 times earnings. $50 times earnings, guys. Why would you buy a company at 50 times earnings? Now, if you're going to do it, I would say do the call option, where you're not paying actually $800 a share. You might be paying, a fraction of that price for it to go up or go down. But I mean, this is another bubble. I forgot Netflix. So out of this S&P 500, out of these companies, you got a couple real companies. You got Amazon, you got Apple, you got Microsoft, you got Google. And then you got a lot of fake companies. You got Meta, you got Tesla, you got Nvidia. These are bubbles. Netflix, another one. What does Facebook produce? What do they make? Absolutely nothing. What does Tesla make? What do they produce? Absolutely nothing. The Tesla is worth more than all the other car manufacturers around the world combined, and yet they only make a fraction of the cars that all the other ones do. Toyota alone, I think, probably 20x how many cars Tesla made. I mean, you look at the size of GM and Ford compared to where Tesla is. That's how big this bubble is. This isn't just a little teeny tiny little bubble. I'm talking about mega bubbles. You had a company that had basically no earnings, that was trading at 1,000 times earnings, and actually those earnings were really negative. And what 50x or so from there, and now this guy's the richest guy in the world. I'm sorry, guys. I went on a rant. I went on a tear, but I just wanted to let you know I'm still here. I'm still watching. Um, I'm just not. I'm just staying pat right now. I don't think it's doom and gloom yet. Now, if World War III starts tomorrow, yeah, I might be wrong. But I think things might go a lot higher before they go lower. So even though these are bubbles, these are huge bubbles, that doesn't mean it can't go up. Anyways, guys, thanks for listening.